Our friend Brian Sachs, the mortgage loan expert, is here because this time of year the housing market is really revving up and you have a lot of big news. But before we get to that, I want to ask you, you drove in from Owings Mills.
Drove in through Owings Mills, very slippery.
I was surprised when you made it here, actually.
Yeah, I was late.
Yeah, you were late, but you got here.
A little earlier, but
yeah.
I'm here, so nothing bad happened, but it is tricky out there.
Yes, it's tricky. All right, now let's move into some big news this week concerning the FHA. Tell me about it.
Well, the FHA has a mortgage insurance, and that mortgage insurance typically is pretty costly. It was 1.35% of your loan every month.
Wow.
And that's now dropped, effective January 26th, to 0.85%. So on a normal $200,000 loan, what does that mean? It means that the average person with a $200,000 loan would save almost $1,000 a year. That's $84 a month.
That's
huge.
Incredible. And this takes effect when?
January 26th.
January 26th. And it applies to who specifically?
Well, anyone obtaining an FHA loan, and if someone has an FHA loan, it may be appropriate to refinance and lower that mortgage insurance.
Oh, so you're going to be busy, huh?
Yes, yes.
All right. And you also want to talk about the benefits of this program.
Well, so the FHA loan really is designed to stimulate first-time buyers, and part of the benefits of the program are low down payment, only 3.5%. The underwriting guidelines tend to be a little bit more liberal. The credit guidelines tend to be a little bit more liberal.
Oh, that helps.
And the appraisal guidelines tend to be a little stricter, which generally protects the buyer. And the seller can assist with closing costs on FHA. It's a great program to use if you're looking to buy a home.
I was asking you earlier about the housing market, and people generally expect the market to really kind of start revving up in the springtime when things look better. But this is actually a pretty busy time, is it not?
It's been revving up, and you know, I'll tell you, this week we had the lowest interest rates since May of 2013.
Wow.
And I've been saying rates are going down.
Yes,
and
you
rates
have.
are going down. Since May of 2013, it's unbelievable. Rates in the threes, fixed rate.
All right, you're busy. All right, we have a question from a viewer. Bob from Timonium wanted to ask you, how many years after a Chapter 7 bankruptcy do I have to wait before I can buy a new home?
It's a great question, and so many folks were affected by the meltdown and the recent economic issues. Typically, the answer is 2 years, and this is really where we're talking about FHA being a great program. On an FHA loan, if you were discharged 1 year, and it was due to an extenuating circumstance beyond your control that you can document, you may be eligible for a mortgage as recently as 1 year after a Chapter 7 bankruptcy, which is huge. And only pay 3.5% down and still have great rates.
You always make it simple for us,
There
easy to understand, Brian. Thank you. And do not go home yet. Stay with us.
I'm going to wait for the salt truck. I'm finding that salt truck.
Yes, exactly. Have a cup of coffee with us.